Um, why isn't the RBI coming out and saying and preparing the markets for their normalization strategy, you think? And when would they do so?
Yeah, I think, what came out clearly in yesterday's policy was that as of now, RBI does remain concerned about, certain pockets of the economy which are extremely weak, and they do not want to disturb and cause any disruption. And that is what is the highlight of that policy. But I agree that there is too much emphasis on attempting to support growth, and somewhere down we are ignoring the inflationary pressures which are building up. More so towards the second half of next year, if we look at the inflation projections of RBI, they look extremely tepid. And clearly the pass-through of the crude oil prices, the supply-side disruption, as you mentioned, all of that is yet to show up in the numbers. And that is where I believe that there will be a change in stance very soon. But for now, the RBI has kind of guided, saying that we are going to be remaining with the current stance for a while now. So that clearly pushes forward any expectations of policy normalization that anybody was really looking for.
It does push it forward, but my follow-up there is, will the RBI blink if the Fed goes faster?
Yeah, absolutely. I think what really we need to keep in mind is that the global situation is turning very rapidly. And with yesterday's US inflation data, clearly, it is just going to worsen the situation. And by the time we really enter into the April policy, RBI will be in a very difficult, balancing act that they'll have to do. And I think where we stand, they have categorically said that they're going to be telegraphing their policy actions ahead. But to be fair, if we look at how the RBI has been managing the policy over the last 2 to 3 months, since September, late September, RBI, much ahead of many other central banks, did go ahead with the end of the asset purchase program that they were doing. And also through a variable reverse repo rate operation, the VRRR, which is there, they have been normalizing liquidity very rapidly. So they have been utilizing that tool much more often over the last few months. And I think even though the reverse repo rate hike would not happen even in April now, given the way the policy has sounded, we do expect that the operating target rate, the overnight market rates that are right now closer to the reverse repo rate, fixed reverse repo rate, that will start shifting towards the repo rate, which is 4%. So that is where the VRRRs and also the introduction of the repo rate operations, variable operations have been introduced in this policy. That is going to be the key tool which RBI will be using to shift the overnight rates closer to the policy rate. And I think that is something which we have to watch out for until they blink on the reverse repo or the stance or the policy rate.